Hello traders, Gary Wagner here. Just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, March 21st, 2019, and this is the Daily Report for Gold and Silver. The market is still reacting favorably to the more dovish tone of the Federal Reserve as revealed during the press conference and statement that was released immediately following this month's FOMC meeting. They stated there would be no interest rate hikes this year, first of all, and only one next year. They also talked about stopping their asset sheet liquidation program in September completely and beginning to taper in May. Those types of statements and actions will have a long-lasting effect on gold, silver, platinum, and palladium pricing, as well as U.S. equities. And I actually expect them now to continue to run in tandem to the upside throughout this next quarter. When we look at the board, we have April gold currently trading at $13.09, putting it up $7.30. It traded to a high today of $13.1270 and a low of $13.0280. Of course, we are focusing on the outer month, the June month. That also gained $7.40. It's currently fixed at $1,315.20. Over to silver. Silver up over 1% today, $15.47. Platinum has just been on fire. That was up $2.80 at $862.40. And lastly, palladium futures, they're also on the rise, gaining $4.80 and closing at $1,565.20. So traders, I do want to start today's show by looking at two separate Fibonacci retracements. The longest data set really begins in December of 2016. It is when gold was trading at 1130, 1129, up until these recent highs just at around 1370. The second data set begins at 1196 and concludes at 1350, meaning only covering this rally here. You can see the shorter data set having the different retracement levels right here, and the longest data set all the way to the right. We also have the 50-day moving average because those are the really three critical areas that we do want to focus on. Now, with that in mind, I can go ahead and blow this chart up so we get a much better idea of where we are currently sitting in terms of pricing itself relative to important levels of support and resistance. The first thing that I find that is extremely important and bullish is the fact that we are solidly above the 50-day moving average. That's the screen line. However, we are still running into a pack of resistance that is based on the 0.23% retracement level, and that's actually a harmonics because you can see that both of these data sets come up to the same conclusion, 0.23 as well as here, 0.23. So as far as the April contract is concerned, and that's most active, so that's what we're using to chart with, 1314 is a number on a closing basis we really need to see taken out because up until now, we're seeing that that is an area that's been providing resistance. I would expect that to flip as it did here. In other words, we had the market come down and it was the loose support area and then became the resistance area right in here. And I would expect it to go back to support once we have pricing effectively close above this particular price point. As I said, from there, we've got two areas that we'd want to watch. It is his former top, roughly, I believe, at 1331, and then this yearly high that comes in approximately at 1350. Those would be our next two targets once we get gold closing above 1313. So traders, my recommendation is to maintain your current long position, to maintain your current stop. We will look to effectively move that stop up probably the beginning of next week. Target areas that we need to watch for the current level of resistance come in at around 1313. We would like to see gold basis April close above that effectively tomorrow or at least at the beginning of next week. Once that is achieved, we will look for our next two areas of potential resistance, 1330 as well as 1350 as key levels to watch. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.